Three, two, one.
Hi guys, welcome to Money Control live stream. It's 1 p.m. on the clock and we are back once again to give you an update on currencies and commodities. Indian rupee and the fall that we've seen. Of course, we're getting out of a very important event, the Fed hiking its rates and giving the commentary that it did. But why should a Fed rate hike rattle the Indian currency so much?
Well, as you pointed out, the surprise from the Fed was not the 75 bips hike, but that the peak rate, the terminal rate could go as high as 4.6.
Yeah.
Markets were not positioned for it. They were positioned for probably a peak rate of 4%. So what happens is in India also the positioning was like that. Now that you are getting a risk-free return, after all there is no currency risk in the dollar, when the risk-free return can be as high as 4.6 at the high, then the 2-year rate also is expected to go to 4.5. It's already at 4.1. It's a sitting duck when you're in an emerging market. Because of the Fed hike, there is a bit of slowdown when hikes happen everywhere. Plus there will be a currency risk. So it's almost an algo trade. When Fed hikes, and that too hikes completely in a nature unprepared for the market, it's an algo trade. There is a sell on EMs. And we were part of that.
That's what we're seeing.
Yes.
But why such a significant fall today? Up until now, the 80 rupees level was something that everybody was scared of, but we're very comfortably breached that on the downside.
I agree. Maybe that was the problem. That everybody was positioned that 80 will be protected. That perhaps was working against us. The Indian rupee clearly outperformed
up until now.
Jan to now. We were clearly outperformers. There were, of course, some Indonesia, Brazil have done better than us. But Brazil are not a commodity currency, so they did well. But all the other Asian countries have done worse than us. Now, there is a reason why the rupee has to depreciate, because we have a current account deficit which is almost 3%. So the market chose to ignore it because that deficit is getting financed. We got very good FPI flows from July, August, September. So even if the deficit is high, the market chose to ignore it. Now suddenly you realize that the deficit may be even wider because we may not be able to export so much, and therefore the big reason also was yuan depreciating. The yuan rupee link is also important because China is one of our biggest trading partners. Our biggest deficit is with them. So they've fallen. You needed 12 rupees to buy a yuan in March. It fell to only 11.8 in July, and now you needed, like 2 days back, you needed just 11 rupees 30 paise to buy a yuan. That makes Indian exports that much less attractive in China and more attractive to buy Chinese import. So the deficit will widen. At some point the RBI had to let go. It used its reserves for some time to prevent volatility. Also a expensive dollar would, a depreciated rupee would mean imports become expensive, and that will mean higher inflation. To a point they did, but when it would be definitely worsening your CAD, they gave up on that 80 mark. They've always said that we don't defend any level, but their behavior indicated that maybe 80 is sacred. Once it fell, all the trades at that point just got swept away. And to be fair, there was serious FII buying of dollars because they sold off equities.
But like you said, we were very hung up on that 80 rupees level. But now that it's breached, what are the next levels to watch out for?
That's the $1 trillion question actually. Can we get the next level? Now, like I said, 80 was not RBI's level. It was more by choice. We have to really see how things proceed from here. The behavior today seems to indicate that over 81, 81.20, the Reserve Bank has come massively in and supplied dollars, and that's why you saw the move below 81. So the market is guessing, is 81 the new 80 for the RBI? But it would be foolhardy to make any such decisions right now because it's an extremely flux moving environment, too many moving pieces. I think people will watch for a few days how the FPIs are behaving. Was it just a knee-jerk algo trade? Higher rate hikes? Sell EMs? Is it just that one-day trade, and will the higher Indian growth again reassert itself? Or is it the other way around? Is it a wait and watch? After all, those who have bought from July to today have lost on share price and they have lost on the
Yeah,
currency.
yeah.
So, they're sitting on probably
Complete
2-3%
loss,
losses, 4% losses in 4 months. So,
Yeah.
the annualized loss is even more. Therefore, they may not choose to come in. Some may choose to go out and think that, okay, we're getting 82 for the rupee, and Indian EPS also can't rise immediately because, so
Yeah.
let us sell. How are people thinking? It's a set of moving pieces, but maybe many traders will want to, give 81 a good bet.
Yeah,
As the new
clearly
80.
as we're seeing. But anything expected next week when the MPC meet, is concluded and when the governor addresses the media? Could he give us a comment on what's happening with the rupee and what's the way forward?
Chances are they will not connect the two,
Okay.
because the RBI and the MPC keep on saying we are an inflation targeting central bank.
Yeah.
So the MPC hasn't even a mandate to discuss
Yeah.
or rationalize its moves on the rupee. RBI has, but MPC doesn't have. So they will say that we are doing it because we see food inflation, vegetable inflation, all that is there. Those are
Yeah.
obvious reasons. But I mean, one can be very sure that CAD or interest rate differential is the big reason. Suppose you have, you are an importer or an exporter. You would not want to stay in dollars because the rupee T-bill rate is 5.5. It's a little over the repo rate.
Right.
The repo rate is 5.4. You will get at least 5.5 for a T-bill. Whereas the US bond will give you, something close to 3% or 4% as the 2-year bond is indicating. But when that goes up, then if you want to attract people to stay in rupees, you also have to have a commensurate hike. So this interest rate differential is a very big bogey that EM central banks have to keep in mind.
Yeah.
It's a great statement which came from a US central banker. Our currency, your problem.
Clearly.
Yeah. So that interest rate differential argument is going to haunt RBI, and that's why until last week when I did a poll, I was getting 35 as the likely rate hike.
Okay.
Today, almost the entire market is saying 50.
50. Yeah, well, just a week to go. Let's see what the final outcome will be. But this is how it is for the rupee for now. 81 we have breached finally for the first time ever. Let's see how the days pan out in the coming week. With that, it's a wrap on today's chat. Thank you so much for tuning in.